comments here. Great questions. Hello, everybody. Good to see you. And okay, first one. So would potential future builds be new raises, projects, or potential upside in this investment? So the way we've structured this is the land is being parceled out. So we can parcel into 5 different projects. And so the first 2 we're taking down on this project. It will likely be future raises that we will be making for the new development. So obviously we would give first kind of right and access to current investors in this project to participate in the next ones. It's possible that we may step up the land basis slightly because of improvements. Like I said earlier, we're not stepping up the basis, even though we've likely increased the value by almost double on the land from entitling it and getting the tax abatements. We may decide to do some type of step up to reward kind of earlier investors, which would be very fair. So that's kind of how we plan to do it. They're separately parceled. We can separately finance them, separately raise equity. We anticipate some of these may turn into build-to-suits, so that would be kind of a whole different risk profile and potentially different financing for that. So great question. What's the next one we got here? Will Acosta be done in 2024? What is the anticipated depreciation for investors? I hit this at the very end, so that's probably answered for you, but just to clarify, in 2024, right, you can't depreciate land. So we've purchased the land, and then starting Q4, we're going to be making the improvements, starting the construction. So there will likely be losses from construction expenses in 2024. And then the majority of the tax benefit is going to come in 2025 through all the construction expenses. And then we will likely do a cost segregation in 2025 because of the improvements that we've made. We can now depreciate and accelerate some of that depreciation for investors. And then the great thing with this investment, right, is most of the returns are going to be considered long-term capital gains when we sell, and that's obviously taxed more favorably than ordinary income. So it's a fairly tax-efficient way to generate some nice returns along the way. Okay, next one. Cameron, he's got all the good questions, man. Keep them coming. What types of industrial tenants are expected to occupy the buildings, whether it be offices or warehouses? How many tenants per building? Was labor pool education available in the market? I think I covered a lot of this. So the way that we build these buildings is as what we call like a warm shell. And effectively that allows us to attract the broadest segment of tenants as possible, because we can really go a myriad of directions. We can go to the more warehousing, heavy office, or more distribution with the cross docking, or manufacturing, light to heavy manufacturing. So we have the ability to meet the needs of all of those types of clients, which is why this works so well, is we can build it to kind of the lowest common denominator, and then we will do the tenant improvements based on the needs of that tenant. And the great thing with those is those are generally financed at a much higher leverage point with a bank. And so we kind of build in estimations of kind of a conservative amount of what we think those tenant improvement allowances would be. But generally the banks come in at a much higher percentage to cover those improvements and bring the overall leverage up a little bit. From the bank standpoint, obviously the risk has been reduced. Now you've got a tenant in place that they can use to underwrite the cash flow. As far as the labor pool, I already hit this on Wichita. It's an incredible labor market for these types of tenants. And if you looked at a lot of those charts I showed in the demand drivers for manufacturing, it's really moving to the Midwest. And really the things we're looking for are, one, cheaper rent, access to most of the country through distribution and good interstates systems. And then the other big piece is labor, right? They want cheap labor to compete against the overseas labor. And that's what Wichita provides, which is why it's such a great secondary market. And obviously Newmark's expectation that secondary markets will outpace primary markets due to those reasons. Great question. John Wyckoff, thanks for chiming in. What was the ROI for investors on your last project in Wichita? So I went through that, and you can see right now we're sitting at about a 61% unrealized gain on as is value right now. So we're deciding to hold that project. We could sell and probably get close to that number, but we feel like there's more upside because we outperformed on the lease rate that we underwrote to, and our cost basis was locked in. And so we have a nice margin. We have some really good rent escalations built into that lease. And we also believe with interest rates kind of on the decline, as most people expect, that will improve capital markets, and we can actually potentially chase a higher price, higher valuation a year or so down the road. So that's the decision we're making. We're returning cash back to investors, tax-free, right, through a refinance. So that's great. And then, from an unrealized standpoint, we generated roughly 60% in 18 months of this unrealized, not realized, but we expect that to likely grow as inflation kicks in, as capital markets improve. And we have appraisals to verify all those numbers that I'm sharing. Do we qualify to get funding under the CHIPS Act? Great question. So we don't. So the CHIPS Act is really intended for manufacturing companies of semiconductors and other chip-related manufacturing. So it's not really for development or real estate opportunities. It's more for the manufacturer of those pieces of the semiconductors and those kind of plants. So not for us, but again, that will drive a lot of the demand. So where these companies come, a lot of times if it's a big company, right, like the Integra plant we talked about, this right next to this project, $1.8 billion project, because of that CHIPS funding, that's allowing them to make those investments, and that creates kind of secondary demand around it, right? So other suppliers to them, it brings kind of a magnetic approach to that market based on those decisions being made by the manufacturers. Okay. How many similar projects and stages in Wichita market? Was a project competitive advantage of the projects? Great question, David. So obviously we've have two other projects in Wichita. One that I mentioned has already been leased. The other one, we're in late stage negotiations for potential other tenants to lease that one up. And that's actually driving a lot of the demand for Bel Aire, because some of those conversations have turned into, what if we do a build to suit, right? And so we don't have anything inked up right now, but we anticipate it's very, very possible that one of the buildings, likely building 2, becomes a build to suit. And if not that, probably future ones. But we've seen a lot of demand. There's a lot of interest in this market. There's not a lot of vacancy in the market, and so there's not a lot of options, especially in the Class A kind of 32-foot clear height buildings that we have that are the nice buildings that these types of tenants want. Competitive advantage or disadvantages to those other projects. It's like I said before, it's very similar. We're bringing kind of the same, A team to this project. This works so well. And, the one I would say competitive advantage we actually have in this new project in Bel Aire is location. So if you know Wichita at all, look kind of the northeastern quadrant. Wichita is kind of made up of 4 quadrants. The northeastern is the kind of nicest part of town, the most development, most activity happening, and where we're able to lock down this land is a very, very prime location. And so we believe location is actually a much more appealing location than the other ones. And then, past projects that we've done, our lead developer, Dan Schulte, one of our partners, he's done a lot of other development in Wichita and has run successful projects through development and has actually made them turned them into REITs, has successfully raised the capital, returned capital, and gone full cycle on those. So a lot of experience in the market. Since inception, have any investors in Aspen ever lost money? Thankfully, no. The answer to that is a emphatic no. Our investors have never lost money investing in any of our funds. Will the accounting of this fund be audited by a third party? They will not. Given the size of the project, we don't generally do it unless the fund is, anywhere from a probably $40 to $50 million fund is kind of the bright line. Just from the size of the project and the cost of an audit, doesn't usually make sense. But our other funds are audited, larger funds. But we will provide financials on a quarterly basis, so you will have clear visibility into everything that's going on, and can always ask any questions related to that as you have. Okay, what percent of range do you amount the depreciation could be? It's a little hard to say. Obviously, this year is going to be a smaller amount as we're just starting the building one in the first quarter. So it takes, again, about 9 to 12 months to construct. So a smaller portion in 2024. If you look at 2025, the estimated kind of based on the estimated costs that we have, we can run some analysis. And actually, a good question. We'll have our team talk with our CPAs to see if they can give us a range on depreciation. Obviously, bonus depreciation goes down potentially next year, but it still likely will be very good, given the one will have losses that will have generated through construction. Like there's likely no income coming until the end of 2025 at the earliest, and then we'll also be able to accelerate the additional improvements that we've made to the property. When Aspen sells this, we'll also have another fund that will be available for investors to 1031 exchange into. We can't confidently say yes, but that would definitely be something we would explore. Obviously, that's beneficial to everybody, and we would definitely look to do that. We have a very, very large pipeline of industrial deals that we're continuing to build out the strategy for the reasons that I shared earlier, why we're so bullish on this vertical. We think it's going to be a decades-long trend that we're going to be a good sized player in. So the likelihood that we'll have something else that we can 1031 into will, I would say, be high, and we'll definitely look to do that if possible. What is our skin in the game? And is this webinar recorded? So this is live right now. The previous portion was recorded. And skin in the game is, we're going to be investing. It's not determined yet, but probably somewhere between $400,000 and $500,000 from principals. All right, go to the next one. Who are the general partners and the percent of the GP? So the only general partners of this deal are Aspen Funds partners. We have no other GPs in this deal. So it's 100% between our 4 partners. The debt is recourse to the GP. That is correct, and not to the LP. So the LP has no recourse, right? If, God forbid, something goes wrong and the bank has to go collect, they go to our personal guarantees, not to the entity, which would have the only asset they would have is the building, obviously, but personal liability is limited to the partners, which is why it's called limited partners, and general partners is we're signing on those guarantees with our own balance sheets. So great questions, guys. Ross just threw in a last minute question here. Well, Mr. Diller, what was the ROI in your last project in Wichita? So yeah, I shared that, and we'll have likely a case study we'll put out here probably early next week. But it's in the presentation. We'll have this recording sent out later today on that. So we were in about an 18-month time period have a 60% unrealized gain profit to investors, 18-month time period. It's unrealized because we're not selling right now. We are returning about 25% of capital back to investors tax-free through a cash-out refinance. And the remaining is considered unrealized until we sell. But we expect that to likely go up as we have rent escalations built in to our leases, and as the capital markets improve with interest rates coming down. So as we sit right now, current assets value about 60% in about an 18-month time period. Okay. All right, guys. Well, with that, I think that's the last questions we've got. Thank you so much for joining. I know this was a little bit long, but I'm going to throw up here on the screen a soft commit QR code. So, and then we also put that link into the chat so people can just click on a link if they don't have their phone. So yeah, this is a link to soft commit. So the way that we work a lot of these deals is we'll get soft commitments. You don't have to, sign the dotted line with a legal document, but this is just to give us an idea of interest, and we go first come, first serve, right? So we've already got a few larger investors that have indicated they want to invest in this project alongside of us, and expect, a decent amount of soft commits to come in today and tomorrow and over the weekend. So, if you want to reserve your spot online, please go to this link and put your soft commitment in, and we'll be sending out legal documents. They should be ready early next week to send out to review, but we'll have all of this webinar recorded, our underwriting files, the slide deck, and several other supplementary information for you to review. We'll be sending out the data room later today, so you can watch this recording again if you like, review the other information, the underwriting models, etc. So go ahead and do this document if you're interested, so you can reserve a spot, and we'll follow up with you from there and confirm that up as you review. So with that, thank you so much for watching. Really appreciate you to spend the time watching this presentation, and hopefully you see the merits of the deal and why we're so excited about it. So have a great day and a great holiday weekend. And before you have too much fun, if you're interested in the deal, be sure to put your stock commitment in. Thanks so much.